Inflation hedge, investing in gold to protect your wealth. Inflation is one of the most underestimated threats to long-term wealth. Even when inflation looks manageable, it quietly reduces your purchasing power year after year, and that's why gold often enters the conversation. Gold has historically been viewed as a store of value. It's not tied to a corporation's profits or a government's ability to print money. It's scarce, globally recognized, and it tends to perform differently than stocks and bonds, especially during periods of uncertainty. Now, gold is not a perfect inflation hedge in every single short-term window. Sometimes gold can move sideways while inflation rises, but over long periods, especially across major economic cycles, gold often holds purchasing power better than paper currency. So how do investors use gold as protection? One approach is diversification, adding gold as a portion of your portfolio so that when traditional assets struggle, you have an alternative asset that may behave differently. Another approach is risk control. Gold can act like insurance during currency concerns, banking stress, geopolitical shocks, or periods where confidence in financial systems declines. You can invest in gold through physical ownership, through ETFs, or through retirement structures like a gold IRA, depending on your goals. The key is not to treat gold as a bet, but as a stabilizer, a strategic piece of a portfolio designed to survive multiple economic outcomes. Visit PreciousMetalsCentral.com to see the top precious metals companies to invest in now.